Hi, I'm Shiv Kalyan, founder and financial advisor of No Bias Financial Services Agency Inc. No Bias Financial Services is an independent agency working with Cart Wealth Management Inc. and Cart Risk Management Inc. Without further ado, let's get into the subject matter that I'm going to talk about today, which is very important as far as I'm concerned. And that subject is life insurance. The purpose of life insurance and its many uses um, that we have in our tax planning and our financial plan. So let's start with the basic question. Most people have a question about should I buy permanent or should I buy term life insurance, which is best? So life insurance is protected, is protection for your family. It ensures that it provides a death benefit to your beneficiaries. It offers you peace of mind. Your loved ones will be safely supported. So the question again is, how do you choose between term and permanent life insurance? So it goes down to, it depends on your budget, how long you need the coverage for, and your long-term plans. So I would say the first thing to do is consider your life insurance goals. So term life insurance is simple to buy, low cost, and affordable. It's a budget friendly solution. It provides a coverage for a specified time period, usually 10, 20, or 30 years. The premiums are guaranteed for that duration. It's great for short term protection such as your mortgage, uh, insurance replacement, or coverage for a child throughout the learning years. Generally, the initial premium are much lower compared to permanent life insurance. At the end of the specified term, the policy either renews at a much higher premium or it terminates. In addition, most term insurance policies can also be converted to permanent insurance without any evidence of insurability. So, permanent insurance offers more comprehensive lifetime coverage, initially a bigger financial commitment, but the higher premiums remain stable throughout the life of the policy or until the claim is paid out. They will never change as the years go by. It also has a lot more features. You can use permanent insurance to help build your family's wealth and offer long term protection to vulnerable loved ones. So, which premiums are more affordable? Term life insurance provides economical, temporary protection. It's, it's like buying a house and getting a mortgage, or uh, renting an apartment or a townhouse, whatever. You never own a rental property, but once the mortgage is paid off, then your residence, your property is yours completely, and it's no different than life insurance. Temporary insurance or term insurance is like renting an insurance. Permanent life is like owning an insurance. So, depending on your age, health, and the amount of coverage you need, a term policy may cost just a few $100s a year. However, your policy will expire. If you still desire life insurance coverage, you must negotiate a new or extended policy. You will be older, your health may have changed, your premiums will be a lot higher, your family is more likely to get the death benefit from permanent life insurance because it actually becomes more economical as the years go by. Just as the initial cost of a mortgage feels weighty at first, but then becomes more manageable as your income grows, the same is true for your commitment to a permanent life insurance policy. So, plan for the long term. You will face dramatically higher premiums, which can make renewing your policy unaffordable. Now, many term policy will allow you to switch term coverage within the first 5 years. This is particularly useful when there are limited dollars. For example, if you purchase a 10-year term policy, in the third year, you could switch to a 20-year plan without any evidence of insurability. So there are a variety of ways you can manage your cost of the policy. So your premiums are based on your age, health, and the policy rate that is set when you're much older. A permanent life insurance policy offers consistent, long-term protection. It's your dedication to your family's welfare with steady premiums that won't increase. Now, you can use your life insurance policy to create a living legacy. Now, what do I mean by that? Now, permanent life insurance is very useful for high income earners. So, if you have an estate that will be subject to a lot of taxes, or you want to build an asset for your family, or you have long term dependents, there are many valuable options. So, use your policy to leave a financial legacy for your heirs. The death benefit will go directly to your beneficiaries, bypassing the probate process, and it's not subject to taxes. You could also use your policy to fund a trust for for your dependent family members who must have long-term support. Your policy can also build equity in the form of cash that accumulate on a tax-deferred basis. You could borrow against this or partially cancel the policy and get some money back. You can also receive yearly dividends, or you can build your family's wealth by continuing to build the cash value of your policy. Now, many of you may have that workplace policy. Chances are you signed up for a workplace policy, life insurance policy, with no medical exam required, and premiums are too high. Having your own private policy ensures that your coverage won't be cancelled if you change jobs. You retain control over it. Some people are afraid to see a doctor. Now, if you're tempted to skip that annoying medical exam, you will pay about 20% more for your premiums because there are options just to avoid the doctor. That is worth it if you have a hidden medical issue. Otherwise, it is not. Now, as a result of the COVID-19 pandemic, the medical exam threshold has been raised much higher. You can work this to your advantage. It used to be mandatory for policies valued at $500,000. Now it is for at least $1 million. So depending on your income or depending on your age, it could be up to $2 million. Now you can get this higher limit without the hassle of having to see a doctor. So your choice of life insurance should be based on your needs, your budget, and your long-term goals. So let's talk about estate planning. How life insurance is ideal for estate planning. So life insurance offers strategic advantages for estate planning. You can use your policy to create tax-free wealth for your heirs, or provide cash to pay taxes and preserve existing assets. With careful planning and a smart tax strategy, you can turn life insurance into a great legacy for your family. Now, life insurance provides immediate cash for expenses. So, estate planning entails clearly and realistically projecting your family's needs and planning for them. After you die, one of the most important pressing issues will be finding the cash to cover expenses. So, through a life insurance policy, um, I can help you plan ample money to support your family and cover the funeral, living, and travel costs they face. Um, it provides immediate cash with no taxes or delays. The probate process is necessary but very time consuming. The courts must confirm that your estate is dispersed within complex legal guidelines. By carefully planning your beneficiary, you can ensure that the death benefit sidesteps probate and avoids estate taxes. It's a great opportunity for you to leverage. In provinces with high levels of probate fees, notably Ontario, British Columbia, and Nova Scotia, the ability to bypass probate can translate into thousands of dollars in savings, even for a relatively modest estate. So, leveraging life insurance to protect both your family and your estate is important. Now, protecting your family assets. Life insurance offers strategic advantages for estate planning. You naturally want to ensure as much as possible of your estate will stay within your family. Taxes and probate fees can take a big bite out of all that you worked so hard to create. Life insurance is your solution. So after you die, your assets will be valued as if sold, called deemed disposition, and then taxed. There are formulas that are used by the accountants to see uh, to to value your assets, valuation of your cottage, for example, or valuation of your investment property. So the immediate payout from your life insurance policy will cover estate costs and protect beloved assets. So, as I said, the family cottage is a good example. Unlike your principal residence, it will be assessed for capital gains on its accrued value. Often, the result is a huge tax bill that can force bereaved families to sell their beloved summer place, but you can prevent this. So you can create an estate for your heirs. So uh, within your estate, assets are taxed differently. For example, RRSP or Registered Retirement Savings Plan, or RIF RRIF, which is Registered Retirement Income Fund, these two are 100% taxable. Stocks are 50% of gains taxable. Mutual funds are 50% of gains taxable. Your principal residence is tax free. Cottage or second property is 50% of gains taxable. Cash is tax free. Life insurance is tax free. TFSA or tax free saving account is tax free. Business shares are 50% of gains taxable. So, one way to leave wealth for a family is through life insurance, where the death benefit can be passed directly to your heirs without additional taxes and probate expenses. To achieve this, your planning must include designating the right beneficiary for your policy. So, let's talk about beneficiaries and dependents. So, life insurance offers strategic advantages for estate planning. To ensure the death benefit from your life insurance won't be taxed as part of your estate, you must name a beneficiary. It is a tax efficient way to bequeath money directly to members of your family. You could also use your policy to establish a trust fund to support a child or other vulnerable family members. If you name more than one beneficiary, the death benefit will be divided among them according to the percentages you specify. Be sure to specify that your beneficiary is revocable, which means you can change this designation at any time. It allows you to adjust your estate planning as your family grows and changes. An irrevocable beneficiary requires written permission from the original beneficiary for you to make such a change, and this could be problematic sometimes. So let's now switch to debt and the family business. So life insurance is used to protect any outstanding debt that you have. Now, this could also go for businesses. So, let's discuss your corporate situation. Okay, if your corporation, or if you're a business owner and you own shares in a corporation, and the corporation has an outstanding debt, well, life insurance does play a part in paying off the debt, so that 100% of your shares are transferable to your beneficiary. It's a mechanism that the accountants will help you through this process. But you should always discuss your corporate situation with your financial advisor. The cash flow could prevent the untimely sale of assets, such as during a market downturn, or buy out a partner to keep the business in the family, or pay expenses while new leadership is hired to continue your legacy. Leveraging life insurance to protect both your family and your estate is important. I cannot stress that enough. So these were some of the things that I have touched upon. Obviously, the type of life insurance product that you should own is completely dependent on your personal situation. So you can either contact me and discuss your situation with me in confidence, so I can help you, guide you in the right direction, or talk to your financial advisor and discuss your situation. Um, so, in my next episode on life insurance, I will be discussing more on other aspects of life insurance, such as joint life insurance, double payout, risk and qualifying, and more. So, I hope you enjoyed my first episode on life insurance, and I look forward to seeing you in episode number 2. I'll announce the date and time, but you will also be able to enjoy this episode in a replay as well if you're not able to join in live. So, for more information, you can visit my website, which is www.nobiasfinancialservices.ca, where we provide a no biased advice because we understand that it matters. Thank you for your time.